Hello, YouTube. Today we're going to talk about losing because I think that there is a lot for us to learn from the psychology of the bears. And frankly, we can learn from Warren Buffett because he is the most successful investor of all time. So if you bear with me today and watch all the way till the end of the video, I am going to leave you with some positive notes and a true plan going into tomorrow. First thing we're going to do is pick up where we left off yesterday, where we were talking about 40892, which was our Tuesday low or the green line. Let's look and see what happened today because we opened just above at 409.18. So we have that same line from yesterday. We had failed breakdown number one. Then we had a breakdown because we failed to recapture it. And then today, if you look at what happened, two candle closes and then just lift off, and we just went dramatically higher. So the low on this candle here is actually 408.95, or the third 50-minute candle. And ever since then, we just went straight up. So what this means is that the people who were shorting this move are just in so much pain right now. They are desperate, they are pleading, and they are angry. So I'm sorry if I sounded a little bit condescending on the video yesterday, and that was intentional because I wanted to try to rattle you. Everyone's pointing to, oh, we finally got an uptick in volume. We're starting to break down. You guys got really cocky. So if you're watching today, and if you were bearish or if you're bullish, I want to make sure I leave you with the lesson I would have heard if our roles were reversed. And what that basically comes down to is what I said, that we need to learn from Warren Buffett. So again, watch all the way till the end if you want to see all of that. We are now here into greed. We notched from 62 to 66. We can also note that the bears are probably very frustrated. And by closing at the high of the day, the high of the week, and we are actually over last week's high. Last week's high is 41192. We're over here at 41347. I'll tell you, I would have preferred if we would have actually faded the close, and that's because I think we're either going to start booming higher, which is going to give us an exhaustive move, or we're not. I would also note it's only Thursday, and the volume on the weekly is already greater than last week. That is bullish. Higher lows, higher highs. Just everything's all around looking really good here. All right, I'm going to ask you for a huge favor, please, and thank you before we go further. If you could consider subscribing to the channel and smashing that thumbs up, I would greatly appreciate it. Let's get this news out of the way because we're going to look at some charts as we go into earnings tomorrow. So we know that we moved lower on CPI yesterday, and I believe that was just a trap for the bears. They gave you the trap. You guys took the bait. You got cocky, and today you got roasted. So here we see PPI coming in for a second month in negative. So we have negative 0.5. And again, producers produce, consumers consume. So this is going to be a leading indicator for CPI into the month of April. The market really latched onto it and went dramatically higher. Something that's really important too is that the Fed has mentioned that they want to see retail sales soften because it shows that the consumer is not as resilient as before. And if you look here to the numbers we're expecting for tomorrow, we're expecting negative prints. This should be interpreted as bullish, but we also have earnings coming out tomorrow, and we got Citibank, Wells Fargo, BlackRock, JP Morgan. I'm not sure what's going to happen. I think I've done well enough to predict where we are up into this week. I don't need to call every little move. However, I did tweet out earlier today, about 3 hours before the market closed, and I updated the ES pain levels. The pain levels were 3966 as our median, 4020 as the largest zone after our median, and then 4120 as the next notable zone. That was 100 points lower. Now we're all the way up here at 4170 something. So we're at 4172 right now. That's like a lot higher. It's another 100 points. So do you want to keep being wrong? Are you tired of losing? Or do you want to finally learn the winning system? Because it's not that difficult. And again, please watch till the end. I'll make sure I leave you with that commentary. So the new zone here is going to be 4150, and that's just because they've been shorting it in this pocket here and now in this most recent pocket. So after we got over 4150, I'm like, whoa, well, if people don't know what's going to happen, we're probably going to go higher because there's no friction anymore. This is the volume by price. When we look at the volume down on the bottom, that's volume by date. So over here, it just shows us that it gets less friction the higher we go. The pain trade is on. The squeeze continues. That's literally the trade here. We also note that Amoroso, I think her name is Anastasia Amoroso from iCapital, is saying that FOMO is back. And we note that by going into greed. I would note that a Fed pause can be bullish because it means that we can have a relief rally. Not saying a new bull market, not saying we go to new highs. It's just relief because that we've been going through 12 months of Fed hikes, and now we're finally going to catch our breath. The Fed pivot is usually when the market gets soft. And that is because the Fed is going to pivot when something is broken or is breaking. So the market wants the pivot, but the reason why the Fed will pivot is likely not going to be the reason why you want. It means that something is breaking, and it means that this is not really all that good. We had LVMH's earnings coming out overnight, and they actually came in okay. I think the stock closed up green today. There was a little bit of bearish news. U.S. Saudi oil pact breaking down as Russia grabs upper hand. So that doesn't look all that great. Fed rate outlook, we talked about that briefly yesterday. And as we move forward here, before we talk about Warren Buffett and what this note here talks about is what you can learn from Warren Buffett's mistakes. And what does that mean? This man is willing to admit when he makes his mistake. He's old, he is wise, and I think we can learn a lot from him. So what this really comes down to is I don't think the bears were ready, willing, or able to admit their mistakes. They keep latching on to the same thing, which is an emotional roller coaster. So we start going down a little bit, notably on QQQ. What do they say? It's still going to fall. What did I say? Well, right, what's going on here? I think that's what a lot of people are feeling today. Oh my goodness, what is going on? Yes. So what it really comes down to is being able to admit that you are wrong. It's very difficult for men to admit they're wrong, let alone to try to adapt. So that's really what it comes down to. And if you want to watch an interview with Warren Buffett, he did a big one with CNBC yesterday, a multi-hour interview. But just read the headline here. It captures the essence of what he's trying to get across. Buffett reacts to the March inflation data. We don't profit from statistics and guessing. We predict from price action. So let's worry less about headlines and let's worry more on trend lines. So headline risk is one thing, but we want to focus on trend lines because that's how we get paid. We get paid when we follow the trend, and the trend is not broken. We are going up. It is not what most people want, but that is the way we're currently going. We also note that we had the Ethereum Shanghai upgrade happening overnight, and it is now complete. Ether crossed over 2K. It was up by a whopping 4.6% today, dragging Bitcoin up, and gold was also up. All right, and then the last one here is that we still have Mike Wilson saying he's sticking to his bearish bet, which means what? More bear fuel. So I talked about before how I would have liked to have seen a fade into the close, and that's just because I'm actually not sure what's going to happen on banks tomorrow. So what this means for me is that we need to continue to go straight up from here, and we can't lose that 4150 area, which means that's basically 4114 SPY, or yesterday's high of the day and last week's high of the week at 41192. Why? Because if this is just a squeeze, we need to continue to squeeze higher, and I'll tell you the reason why. It comes down to math, which is what we briefly went over yesterday. We got 41405 as our 50% retracement. And what you have to remember is what a 50% retracement on the Fibonacci means is that we start at 480 or our all-time high, 479.98. We go all the way down to 348. And now we've recouped half the loss, which means we went down and now we've retraced half the move as of this close on this Thursday. And this is a weekly chart. So we're not sure what's going to happen into tomorrow. But there is going to be some math at play here because off the bottom, they've been able to recapture half the loss, and we are now more than half. We're almost exactly half off the top. That is a natural area for algos and robots to do trading. Second thing I would note is that we're getting really close to that bull market at 417.8. So why does this matter? Because there's two areas I'm looking at for tomorrow. I believe we're going to get a 1% move. So the 1% move could either take us back down here to about 410 or 409.7, which was the high from the pump on the week of March 27th. And that would take us back down to close right there. Or we can rally up by roughly another 1% and birth the bull on a weekly closing basis by getting above 417.8 or this red line. So what it really comes down to is whether or not the bears are going to continue to try to take the chart down, or if they're going to say, you know what, I'm tapping out. That's been enough pain. I'm going to fight to survive another day. I'm going to take some lashings now so I can survive for the future. And without going too much further, that's what it really comes down to. We also saw QQQ, which we talked about yesterday, really powering up. So we talked about that seasonality chart, which you guys made fun of me for. Sorry, bears, right? You guys are all rattled. Here we are. We're higher. So we have a move off of that area. And if we go to a simple, the humble line chart, it bounced almost perfectly off the area I wanted. What was that? That's a weekly level. It's also going to be a Fibonacci level, and it's also our relative highs that we have here. So the chart pretty much gave me exactly what I wanted. We came up to 318 a couple of times. We butted up against it and then finally self-manifested and got back above. What does that mean? We are green on the week for QQQ. We talked about this being a turning point, and the turning point was for us to go up. It's not really all that complicated. We can also note the same math is at play here, but QQQ was actually only at the lower Fibonacci at 38.2. We would have to get to 331 or get to 32797, my target, which is still 20% off the all-time highs, for us to pick up where S&P already is right now. So is QQQ going to continue to power up, or are we due for a bit of a fade tomorrow? And as always, we look here to the last chart. Let's look at DXY. DXY actually cracked 101. That's a very significant level for me on the daily. We're almost printing a weekly lower low as well. Actually, we are in a weekly lower low. All right, last one here, the VIX. VIX is getting stomped. It's down here to 17 or into those mid-teens. Other than that, there's a lot more we could talk about. Almost every ETF is green, but the last chart I want to look at is going to be RSP, because this was the one that we talked about, that we were at a turning point where if we're able to hold the weekly chart and we're going to advance, well, we did that. Weekly volume is already pretty solid here. This looks like a weekly candle. It's only Thursday. So if we think about this, what did we do on S&P? We got over to a weekly higher high. We held the higher low, and we were over last week's high. Here we got 12529. We closed out at 145.31. We saved it by 2 cents. So what it really comes down to is whether or not you're willing to admit you're wrong. And I know it's very hard to admit you're wrong when you say, I shoulda, woulda, coulda. Should have been aware at the low at the bottom. Would have done this. Would have done that. But it is never too late to admit you're wrong. So what this comes down to is whether or not we're seeing breadth and depth in the market, because for a large part of the year, it was the S&P 5. And I'm talking about the largest blocks: Apple, Microsoft, Google, Amazon, Nvidia, which were dragging the market higher. But now, as we go into sectors, we note that most pockets are green. Financials are mixed. Healthcare is mixed. But otherwise, like, most pockets are like generally green. And I'm talking nicely green. So with that said, into bank earnings tomorrow, I wish you the best of luck. I would watch the weekend video now queued up if you want to see more. If not, come hang out with me, Justin, from YouTube, by going to the link in the description, joining us for 14 free days. And if not, we will be live for the final hour tomorrow. Thank you so much for tuning in. I will see you tomorrow.